Okay, so my plan this morning is if we start pulling down at the open, I'm going to look to get long at demand. The reason for this is that we keep making higher highs and lower lows. So right now we want to make our main focus on to know what the current trend is. And obviously we're in an uptrend, but the micro scale, what we're doing really today is making higher highs and lower lows. So right now the trend is basically neutral. So we have to wait to see if we start getting bidders or if we start rejecting supply. So you have to stay nimble during this period, and you have to have a plan for both directions, because right now the volatility in this market, we're getting 60-point moves to the upside, 60-point moves to the downside, like it's a normal trading day, right? So you have to have a plan for both sides. My plan today for the downside is this 15-minute demand zone. It held already after this nice drop down. So if we get a pullback at the open, I'm going to look to long at this 15-minute demand zone as long as we start seeing buying down there. And if we start breaking down to the downside below this 15-minute demand zone, I'm not going to panic. I'm not going to get in short. I'm not going to chase a short, because right below it we have a strong 1-hour demand zone. So this is a very strong level. Obviously it's a larger time frame zone, so larger time frames produce greater reactions. So I'll be looking to get long as we hold this 1 hour, and I'll put my stop loss below this 1 hour. That's to the downside. Now to the upside, we have a nice new formation of a 2-hour supply zone, which just formed. So if we do get a pullback into here, like I said, I'm not going to panic. I'll look to get long as we hold. If we do not hold, I'll look to get long in this 1-hour zone, and this 1-hour zone is a strong zone that I really do believe we will hold if we do sell off at the open. So I'll update you guys now that you guys know my plan. I'll let you guys know, the next move, and if I do enter and I do see something that I like. All right, so it looks like this is the first 20 minutes of the market open, and it looks like we're selling off. We have a decent amount of volume, so I'm looking for this 15-minute to hold. We did form a 5-minute, but I'm not really going to trade off of a 5-minute zone. So like I said, I want to see a retracement into this 15-minute and a nice bounce. The first 4 or 5 candles are red, so it's definitely, we have potential to form a nice V bounce out of this demand, and I'll look to get long after maybe the first 5 or 15-minute candle closes, and we get a nice bull, some nice bidders stepping in down here. So we're gonna see. Okay, so we had a nice move up. We formed a new 15-minute demand zone. We never bounced at that zone I was looking at, so that was never a long, it never triggered to be a long position. Yes, we moved up, but it never hit my 15-minute zone down here at 25.76, so that never was a valid trade that triggered. I didn't take that long to the upside, so I definitely missed out on that move, but that's not a big deal because we're now approaching 2-hour supply. And like I said, the supply zone is inside of another supply zone, so it's double confirmation. So what I'm really looking for is a move into this zone. Price has to print inside of the 2-hour zone, which is at 26 and a quarter. We have to print inside, and I need bearish confirmation. I need either a bearish candle to form inside, I need a lower high, I need a doji, or I even need some type of chart pattern that's going to indicate a move or a reversal to the downside. Once I see that, that's obviously going to confirm that sellers are in control. And then what I can properly do is put a stop loss above this high at 26.3575. Now I'm not going to put it exactly at 26.3575. I might put it a point or two above that level because you have to give it a little breathing room. But it just gives me a proper entry and a proper plan to exit if the trade does go against me. But I'm not going to hop in also blindly once price does come into the zone. If we ever even do come into it. If we don't come into it, it's obviously going to be a no trade, like the 15-minute demand down here. But this one, it has to trigger inside, and I have to wait for confirmation on the downside. Okay, so we had a nice 5-minute close. We had a lower high in this 2-hour. It looks like we're starting to move up here, but look at that volume on a 5-minute chart. So what I see there is that for every buyer there's a seller, and for every seller there's a buyer. So I think that this supply zone, we had a lot of traders buying into supply, so all those sell orders were to get filled. So I'm just going to market order in here. I'm in 10 contracts of SPY. So I'm expecting this move down. We had a nice 30-minute, on a 30-minute chart, we have a nice upper wick. A 15-minute chart, we're closing below this. So what made me really enter was on this 5-minute chart, inside the 2-hour supply, we had a nice 2 red candles. We had a lower high, and I'm really just waiting for this to reject. The best part about it is that my stop is really only 10 points to the upside. So it's a really small risk. I'm not really risking that much. I'm only risking 10 points on the S&P for maybe a potential profit for us to come down into 15-minute demand, where I'll look to take profit. And that is at 25.95. So I'm going to be risking a little under 10 points to make, what is that, 30 points almost. So I'm comfortable doing that. That's a 3-to-1 risk to reward, small risk and a high reward. That's why I'm trading the option contracts right now. So I bought 10 259 puts. If we do break this high, I'm not going to panic. Like I said, my stop loss is above this supply zone. So I'll keep you guys updating when I make my next move. Okay, so what I don't like right here is that this opening price held when we pulled back. So right where my cursor is, we came down, we pulled back into it. So this old resistance turned into new support. I don't like that. So we potentially could see a rally back into the supply zone. But I'm going to hold my 10 contracts. I got a fill price at 250. So if we do move back up into the supply, I'm not going to worry. I'm going to keep my plan and exit once we do come above 26.36. All right, so it looks like we're breaking high of day, and usually what happens is on the ES, on the E-mini, we could break it by a tick or two, and what happens is retail keeps chasing this, and what they're doing is they're chasing it into the long side, above high a day, and they're just providing liquidity for this supply to get filled. So I'm okay with us breaking this high. Like I said, my contracts are down about 50 cents, 40 cents on 10 contracts. So right now I'm down only $400. If we come up another 9 points, I'm not sure what the premiums are going to be at, but it's normal for us to break high a day on something like this, and I'm okay with it because that's part of the plan, is that how these institutions and how big money tricks retail. So a normal person would chase a high a day breakout to the upside, but what they don't know is, if they don't know the strategy, is that we're in a supply zone. So that's not going to turn out well. So I'm just starting to get a lot more confident about this trade. All right, so we had a nice push down right into my target of 15-minute demand. You see this elevated volume? All right, I just sold. Okay. You see this elevated volume? This elevated volume, like I said before, for every buyer there's a seller, and for every seller there's a buyer. So when I see elevated volume in a supply or demand zone, that just means people are selling a drop into a demand zone where there are unfilled buy orders. So they're selling into buyers, and I think that these buyers are going to now bid this up, and we're going to take it now to the upside into a next supply zone. So I just sold my puts. I sold my 10 puts at 360, 363. I got in at 250 to 363. But besides the point, this large volume down here inside of the demand zone gave me enough confirmation. Look at the wick we have on a 15-minute chart. Look at the wick we have on a 30-minute chart. And this volume just confirms it. So I'm expecting a nice bounce out of this zone to a supply zone, and then maybe back down to test another demand zone. But I'm comfortable selling and taking profits down here inside of this 15-minute demand zone. All right, just what I was expecting. A nice bounce out of this 15-minute demand zone. We had nice confirmation down here. The point I want to make is that, remember that chart pattern I said I was looking for in supply, or a bearish confirmation, or a candlestick closure, a lower high? We got a nice double top in supply. So that just means it's double conviction. It's double confirmation. We had a top up here, and we had another top over here. So if I was smart, what I would have done is added to my position maybe after the second double top. And now that I'm in a greater position, what I could have done was now put my stop maybe above the high because we double topped. Because I'm in a larger contract size, I would have put my stop loss lower and put it at the high instead of putting at the high of the supply zone. But I mean, it was a great trade. It was a 250 to 363 and exit. So that is on 10 contracts. That's $1,100. And we're getting this much expected bounce out of this demand zone.